Good afternoon, sir. I hope I'm audible. Thank you. We'll be starting in next
Yes,
1 minute.
you are audible. Yeah.
Sure. Good afternoon, everyone. Welcome to today's webinar on the impact of UAE corporate tax on real estate income. My name is Karan Mutneja. I'm managing partner at Perspective Tax Consultant. And today I'm your host and moderator for this event. Real estate has always been a crucial sector in UAE, and with the recent introduction of corporate tax regulations, it becomes very essential to understand how these tax implications specifically impact real estate income. To enlighten us on this topic, we have with us our senior partner, CA Jay Kumar Tejwani. He carries over 27 years of experience in international and direct taxes. We also have our dynamic speakers with us today, Shashi Podar and Vaishnavi Raghuvanshi, who will share their expertise and insights on this important topic. So, before we move on to our speakers, I would request Jaisar to throw some light on the importance of this topic. Over to you, Jaisar.
Thank you, Karan. And I welcome the speakers, very dynamic speakers, as you mentioned, Shashi and Vaishnavi. And also welcome all the attendees. I'm so happy to see you all here. And topic of real estate is always very, very important as far as UAE is concerned. And today we are going to actually talk about how the real estate income in terms of rental, in terms of capital gains, is going to be covered under the UAE Corporate Tax. The most important point in real estate income is three aspects. Number one, as per the UAE Corporate Tax, income arising out of the business activity. If the premises are used for the business purposes, they get covered for the UAE Corporate Tax purpose. Anything used for accommodation, be it residential or otherwise in the form of hotels, motels, B&B, they actually don't get covered. And second important aspect is the DTAA by UAE with other countries. And most of the DTAAs between UAE and other countries, they state that wherever the property is situated, that country will have the first right taxation. So I'll take it, otherwise, person, maybe a non-resident person or even a natural resident person of UAE, having a property in India, India will have the first right to taxation. And if it is a property income which is giving the rentals and used for business purposes, that also becomes taxable in UAE. But the tax credit, whatever taxes are paid in India, will be available to such person in UAE. And third, again, very important aspect is from the BEPS and MLI angle, because in UAE, only the properties which are generating the business income, or in other words, properties which are used for the business purposes are getting taxed. So BEPS in such a, so I'm just using the short form, assuming that Shashi will cover the full forms. So in the base erosion and profit shifting, if a person is holding property and coloring it as not used for the business purposes, there are certain provisions in PEPs and MLI which makes it liable for taxation in the, if not in UAE, in the other. So, Shashi, I welcome you. You're a wonderful speaker. Please enlighten us on income, the real estate from UAE. Over to you, Shashi. Thank you.
Sure. Thank you so much, Jay sir. So today we are discussing on corporate tax impact on real estate income. We will be beginning our discussion with the key definitions as per the UAE corporate tax law, followed by the taxability and then the case studies. So we will begin with how does the UAE corporate tax law define real estate property? Our first definition is immovable property. Immovable property has been defined as any area of land over which rights or interests or services can be created. Any building, structure, or engineering work attached to the land permanently or attached to the seabed. Any fixture or equipment which makes up a permanent part of the land or is permanently attached to the building, structure, or engineering work or attached to the seabed. So our key takeaways from this definition of immovable property is that temporary attachments to land such as tents would not be considered as immovable property. The attachment has to be permanently attached to land or the seabed. According to various worldwide case laws, we have concluded that any fixture which is so annexed that its removal will cause great damage to the land, it contributes to a strong ground for the assumption that such a structure was annexed to the land in perpetuity and it could be considered as immovable property. So the severance of the structure should not permanently damage the land, and it should form a permanent part of land to be considered as immovable property. Moving on to commercial property. Commercial property has been defined as an immovable property or part of an immovable property which is used exclusively for business or business activity, and it is not used as a place of residence or accommodation, including hotels, motels, bread and breakfast establishments, serviced apartments, and the like. So basically, the activity which is carried on by the lessee is relevant. If in a building, a property is let out to a tenant who exclusively carries on business activities from that property, then rental income from the property would be termed as income from commercial property. We will move on to what does the UAE corporate tax law state? So we are dividing our discussion into resident natural persons, resident juridical persons, and non-resident persons, which we have further divided into non-resident natural persons and non-resident juridical persons. So first, in case of resident natural persons, they are taxed in respect of income which is earned from business or business activity conducted in the UAE. So for resident natural person, income is taxable only if it is related to the business or business activity conducted in the UAE. This income can be earned within the UAE or outside UAE, but it should be related to the business activity which is conducted in the UAE. Also, the UAE corporate tax law states that income earned from real estate which is not conducted through or does not require a license in the UAE will be out of scope from the UAE corporate tax law only in respect of resident natural persons. So if the activity which is being conducted by them requires a license, then it will be considered taxable. But no such relaxation has been provided for any person other than resident natural persons. So in case of resident juridical person, all income from the UAE and outside UAE will be taxed in UAE, irrespective of whether that activity requires a license or does not require a license. In case of non-resident persons, income which is sourced from the UAE, income which has a nexus in the UAE, or income which has been derived from a permanent establishment of that non-resident person in the UAE is taxed in the UAE. So again, it does not matter if that income requires a license or not. If it is sourced from the UAE, if it has a nexus from the UAE, and if it is derived from a permanent establishment in the UAE, it will be taxed in the UAE. We are further dividing our non-resident person criteria into non-resident juridical person and non-resident natural persons. So Article 13 of the corporate tax law states that income from immovable property in the UAE is to be considered as state source income. So if a non-resident person outside UAE is earning any income from any kind of immovable property which is located in the UAE, it would be considered as a state source income. However, a cabinet decision 56 of 2023 was introduced where it states that incomes earned from immovable property in the UAE by non-resident juridical person would be considered as nexus in the UAE. Now you may ask that why was this cabinet decision introduced when regardless any income from immovable property is anyway considered as state source income. So upon a careful reading of the cabinet decision, we got to know that if you have a nexus in the UAE and if you are a non-resident juridical person earning income from immovable property in the UAE, you are required to get registered with the FTA and pay taxes on the income. But if you are falling under state source income, you are not required to register as of now, and withholding taxes would apply on your state source income, which currently is set at 0%. So to differentiate between the two, this cabinet decision was introduced. Taxable income from immovable property can be income derived from a right in rem, sale, disposal, assignment, direct use, letting, subletting, or any other form of exploitation of immovable property. We will move on to the specifications for qualified free zone person. So as we all know, if a person is a qualified free zone person under the UAE corporate tax law, they will be taxed at 0% in case of qualifying income and 9% in case of non-qualifying income. It has been mentioned that revenue from commercial property located in a free zone earned from any free zone person would be qualifying income and would be taxed at 0%. Any other form of income from any immovable property which does not fall into this criteria would be taxed at 9%. So in case of qualifying free zone persons, we need to test on three things: whether it is a commercial property, which we have already discussed earlier, whether it is located in a free zone, and whether the income is earned from any free zone person. The law does not specify that the income has to be earned from a qualifying free zone person. As long as you're earning income from any free zone person, you can claim it as qualifying income, which would be taxed at 0%. So if your commercial property is located in a free zone and if the income is earned from any non-free zone person, it would be taxed at 9%. If you're earning revenue from any non-commercial property located anywhere in the UAE or outside UAE, it would be taxed at 9%. I would like to hand over the session to Karan to take this forward. Thank you.
Thank you so much, Shashi, for enlightening us with the taxability and impact on the properties, commercial property or residential property held in UAE or outside UAE. And it is important for the juridical person specifically to make sure that what is the impact of tax on the properties they held in UAE or outside UAE. So with this, now I would like to invite my next speaker, Vaishnavi Raghuvanshi. She will be taking us more deep into the topic through some of the very interesting and realistic case study. So Vaishnavi, hand it over to you.
Thank you, sir. As Shashi told us about the various factors which determine the taxability of real estate income under UAE corporate tax law. Now let's understood all these taxability with the help of different scenarios. The first scenario is Omega Hotel, free zone establishment. A qualified free zone person situated in Fujairah free zone earn income from its hotel business in free zone. Now the question is this taxable under UAE corporate tax law at 9% or 0%? For this, I will request Karan sir to open the poll so let's our audience can answer. Is this income is taxable under UAE corporate tax law or not? So while determining the taxability, as we have seen, there are multiple factors that we need to keep in mind. The answer is 9%, which is for 33% people, and 0% is by 67% people. So let's move toward the answer. While determining the taxability of a qualified free zone person, there are certain factors keep in mind, that whether the property is a commercial property or not. As we have discussed in the previous slide, which is taken by the Sashi, and she told that any property which is used for the residential purpose or accommodation purpose is not considered as a commercial property. That means the hotel building should not be considered as a commercial property. Hence, the income from this hotel will be taxable at the rate 9% in the hands of free zone. Moving towards to the second case study, Eclair Properties Free Zone Establishment, a qualified free zone person has rented out a property in a building that is situated in a free zone to two co-founders of a startup engaged in home baking business in the free zone. They use the space for their personal cooking as well as for their baking business. Their orders are processed from this property. At night, they cease their business activity and sleep therein. Now the question is this property taxable under corporate tax law at 9% or 0%? Now, let's again analyze the factors. It is a qualified free zone person. So we have to understood that whether this building will be considered as commercial property or non-commercial property. We have seen in the definition of commercial property that the property should be exclusively used for the business purpose. In this case, we have seen that the person or the co-founders are using this property for business as well as for their personal purpose. Because in night they stop their business and sleep therein. So this property will not be considered as a commercial property. Hence, it will be taxable at the rate 9%. The next case study is Mr. Khan, currently a resident of Singapore, has an ancestral park in UAE with a big banyan tree covering most part of the land. It has been recently announced that it is the oldest tree in the UAE. The UAE government decides to preserve the tree on its own account and offer a yearly fees to Mr. Khan for his approval. Now the question for you all is Mr. Khan required to register for UAE Corporate Tax? I request Karan sir to open the poll for the audience. While giving the answer, consider certain factors. Mr. Khan is a non-resident person earning income from the tree. You have to understand whether this tree is an immovable property or not. So let's see the answers. So it's 50-50, 50% audience are saying that it will be required to register for corporate tax and 50% are saying that Mr. Khan is not required to register. So now we have to analyze that whether this banyan tree will be treated as an immovable property or not. We have seen in the previous description that any structure which is permanently attached to the land or removal of which will cause permanent damage or severe damage to the land will be treated as a immovable property. It is backed by many case laws also. So here, as we have seen that this tree is the very historical significance and the oldest tree, and the removal of which will cause the land, it will be treated as the immovable property. Now, the tree is immovable property and a non-resident natural person is earning income from an immovable property. When it comes to the natural person, the income which he is earning from the immovable property will be treated as state sourced income. So he is not required to register under corporate tax law. However, the regulations of withholding tax will be applied and he has to pay the tax whatever the rate of withholding tax is. As of now, the withholding tax rate in UAE is 0%. Moving toward our next case study, FIFA LLC incorporated in Europe decides to conduct FIFA World Cup in UAE. For this, they build a football stadium in Abu Dhabi with the intention to dismantle and remove it after the completion of World Cup matches. After the final match, UAE government requested FIFA LLC to retain the stadium for a couple of months, as UAE government is also planning to conduct another big sporting event. For the same, UAE government will pay lease rent till the time such a stadium is being used by them. Now, the question is FIFA LLC required to register under UAE Corporate Tax? I would request Karan sir to open the poll so our audience can answer. Now, while answering, you have to again consider certain factors. FIFA LLC is a juridical person and a non-resident juridical person. You have to analyze whether this stadium is an immovable property or not. So the answer is 73% of you are saying yes, FIFA LLC required to register under corporate tax, and 27% of you are saying no. So let's consider all the facts. This football stadium incorporated by FIFA LLC, the intention of FIFA LLC is dismantle it and not to keep it for long time or permanently. The definition of immovable property said that the structure should be permanently stable over this immovable property, and the temporary structures are not treated as immovable property. Here, as the intention of further removal is there from FIFA LLC, this stadium will not be treated as immovable property. It will be treated as movable property. Any income earned by a non-resident juridical person from movable property in UAE will be treated as state-sourced income and not as the income from nexus in UAE. In this case, the provisions of withholding tax will be applied. However, FIFA LLC is not required to register under UAE corporate tax law. The next case study says Gulf LLC, a tax resident of Saudi Arabia, has an oil rig in the territorial water of UAE. The oil reserves had come to an end years ago, and there is no business activity being carried out through such oil rig over the years. The UAE government decides to buy the oil rig from Gulf LLC. Is Gulf LLC required to register for UAE corporate tax? Now, in this case, Gulf LLC is also a non-resident juridical person, as in the previous case, FIFA LLC was. The question is whether the oil rig is a immovable property or not. So the answer is yes. Oil rig will be considered as immovable property because it is a permanent structure that is attached to the seabeds. Any removal of this oil rigs will definitely cause permanent damage to the seabed. In this case, it will be treated as immovable property. Now, a juridical person who is a non-resident earning income in UAE from a immovable property, it will be treated as nexus of that juridical person in UAE, and Gulf LLC is required to register under UAE corporate tax law as they are earning income from immovable property which is situated in UAE. Now, the next case is Mr. Sudhir, a UAE tax resident, is primarily engaged in the business of buying multiple residential properties on his own firm's accounts and rents them out. In the current year, he used the proceeds from his business to buy properties in India and earn rental income from those properties. Is Mr. Sudhir required to register or pay taxes on such income in the UAE? Now let's analyze this case one by one. Mr. Sudhir is a natural person, a UAE tax resident. That means a natural resident person. A natural resident person, and his business is buying multiple residential properties. That means the income from the residential properties is taxable as it requires the trade license in UAE. Now he is earning the income from India also, and that business is also related to the business which he is doing in UAE. That means the income of India, which he is earning from immovable property, will also get taxed in UAE. As the global income of a resident person is taxed in UAE. Now, the big question is, as I said, that the immovable properties income which is earned by Mr. Sudhir in India will be taxed in UAE. As per the Indian income tax, any income which is arrived or accrues from immovable property which is situated in India will tax in India also. So you may ask that this income which Mr. Sudhir is earning will be taxed in two countries, that is in UAE due to his residency, and in India because the property is situated in immovable property. If yes, then it will definitely cause the double taxation in the hands of Mr. Sudhir. In this case, the double tax agreement between the UAE and India comes to play. The agreement between India and UAE states that any income which is derived by the resident, in our case, Mr. Sudhir. So any income derived by Mr. Sudhir from immovable property situated in other contracting state, in our case, that is in India, may be taxed in the other state, that is in India. So under Article 6 of India UADTAA, any income which is derived by Mr. Sudhir from the immovable property which is situated in India will be taxed in India. As a result, the rental income which Mr. Sudhir is earning from Indian immovable property will finally taxed in India. In this case, while filing the final return in UAE, as he is the tax resident of UAE, he can claim the credit for the tax he paid in India. So as we have seen the different scenarios and different of the different persons, we can understand that the taxability of the real estate income depends on the certain factors, which are whether the person is a natural person or a juridical person or a free zone person, a resident natural person, a resident juridical person, or a non-resident person. Again, one more thing, in case of a qualifying free zone person, we have to see very closely that whether the property is a commercial property or a non-commercial property. With this, I would like to hand over the session to Karan sir. Thank you.
Thank you so much, Vaishnavi. Uh, and I believe that such case studies will definitely, will help our audience to understand the tax implication of real estate income on the properties being held by their clients or themselves. So, yeah. So before we proceed to Q&A session, I would request and invite the audience here to scan this QR code and join another initiative taken by Prospective, which is a Think Tax initiative. It's a WhatsApp group where we keep sharing updates and knowledge on taxation in UAE and internationally as well. So, yeah, we'll just give another 30 seconds and then we'll move to Q&A session. Request audience to start putting their questions in the Q&A tab through the Q&A tab. And this 30-minute session is something which we'll be conducting on a weekly basis. So we'll be sending you all the invitations and look forward for further participation. Jay sir, any final words from your side?
Yeah, I think very well organized webinar, Karan and Pooja, and the speakers were just amazing. Vaishnavi, you covered the case studies in a very thoughtful and thorough manner. His presentation on the technical aspect was very clear. So thank you, both of you. And also Thanks to all the participants. It's so live. Thank you very much. And Karan, I really respect that every week 30 minutes session covering different aspects. You're great help. And I have already joined your think tax. It's I find the post to be very knowledgeable, and you really cover and you keep us updated on the UAE. Thank you very much.
Thank you so much. So we'll conclude this session. Thank you everyone for joining in. The recording and the PPT will be shared over the email. Thank you.